Good evening. This is the Elliott wave update for the NASDAQ 100 for Sunday, April 10th, 2022. I am making this update, or tonight's update, about an hour and 10 minutes prior to the opening of the Globex session due to a personal obligation that I have for later this evening. I want to get these updates on before the markets actually open, in this case, so that we can get them before I would be able to, which would be much later this evening, to get them on uploaded. So beginning here with the NASDAQ, interesting expiration. I will start there, but first let me just give you a quick update. We are still within the current preferred view, which is that the market did complete intermediate 5, primary 5, cycle 5, and super cycle wave 3 at the 16,767 level, and have thus far put in an intermediate wave 1, and I'm leaving it where this is intermediate as minor wave A of intermediate wave 2, minor wave B of intermediate wave 2, which left us with a C wave to go up. Now, as I left it on last Thursday for Friday's trade, I was anticipating that we had reached that low again, which is at 14,317-ish. So it was 317 on Thursday, and that we rallied off of those lows very nicely, by the way, and that I felt that the B wave was done and we were in a minor C wave up to complete this intermediate wave 2. And that we carried the potential for the market to get up to 15,785 or back above 16,000, with a total upside range to possibly get up to 16,695-ish, which is where wave C would be equal to wave A. Now, the market did start in a little bit more positive mode, and it did start to rally, and I'm going to drop down to that hourly so we can see some of the internal details here. So we did kind of come down. Let's just all cooperate. There you go. We did kind of come down. Here we are on Thursday, and then we had, that's Friday, so we had Thursday's close. There's a 9, 10, 11, then we got up to here. So actually Thursday's close was higher. So I take this all back. Thursday's close was higher. I was anticipating that we might have a small pullback, and then it's just continuation, and we start going back above 14,500, 600, 700, 800, etc. But that did not occur. So as we got into Friday, they brought the market back down. In fact, the market went back down, created a new low below that 4317 or 14,317 that we saw on Thursday, and reached 14,312. And then again, at the end of the day, broke it one more time, getting down to 14,310. Now, whether this level actually completes that B wave, I may be moving this over and considering that this 3, 4, it doesn't fit. That I think is still 5, and this was the rally up. So, but it's kind of coming out a little bit strange. And even if this is one, a B, it did go up and make a slight new high. So it made a slight new high here and then drove lower again. So whether I want to consider A, B, and this is a C, I don't know. I just am not real comfortable with how this is all kind of playing out right now, because the market did come back down, retested that low, put in a slight new low, rallied again, and then dropped again back down there. So it's not necessarily really looking all that positive for this move to continue higher. Now, if I had to place it in what was going on here, it actually still doesn't play in, because even if I want to consider this as wave 1 of C, this can't be wave 2 because it already overshot the bottom of, or the starting point for wave 1. So again, unclear at this juncture of exactly what the charts are beginning to tell us in terms of what is taking place in these moves. Let me see if I can get this to open up. There you go. So again, and we have Thursday's low. And then it appeared that we got a little 1, 2, 3, 4, 5, an ABC, another 3 waves up, which is not a good thing, and then a larger drop. So it's just very unclear. But if I had to really think this is 1, 2, 3, 4, 5, or 4 and 5 is inside here, and then we went up again, but in a 3 wave, and we're coming back down in 5. So we did not close that far above the low at 14,310.50. So I think this opening is going to be very, very interesting. What we did continue to see towards the end of last week, Thursday and Friday, were the 10-year, the 10-year note, the 2-year note, and the 5-year note, all making additional new lows in their cycling lower. And so inflation continues to be a problem for the market. The fact that interest rates are going to likely go up much more than what we anticipate or what the market has already baked in anticipation is likely not in the picture. It just doesn't seem to be working out for the market in terms of building on a rally. So as I have stated, if we end up that this could actually be the end of the 3, this could be the 4, and this is the 5 all the way down to here, and that we still could have that rally up. But if that is the case, while I can allow for some additional downside before we can put the finish of wave C, I actually do not want to see it coming too far below 14,100, because that's are beginning to be points that should not be touched. And as we kind of get down here, we have the 382, but these are pretty far for that much larger move down. So how do I want to leave this and what we need to look for tomorrow? I honestly believe we should see continued follow through to the downside, and that should start with the Globus market tonight. Now, depending on how low they take it, if they're coming in as stronger sellers, then will have no choice but then to go back up. I'm going to go back to that daily so I can show you what I'm going to have to do. If we're thinking that the market is just really going to collapse down here, and this is going to be left as a 1, 2, 1 of 3, 2 of 3, and we're just going to go down severely right now, then this ends up being the finishing point for intermediate wave 2. And I would have to then go back in and break this all down to work it as an ABC up for all of the move. So in other words, intermediate wave 2 would end here. I'd have to put a minor A, B, and C within this, and then this would be, we're off to the races in an intermediate 3rd wave. That remains a strong possibility. So here is how I need to leave this for us right now. If the market continues to slide and it really does drift below 14,100, that's kind of going to be my line in the sand in terms of how deep this particular B wave should go before we see the rally. Now, understandably, I did put that back in, but this is for the upside. I can put one more. I'm going to take this one off. Come on. Do it that way. Actually, I can't because this is a new computer and I've not gotten it up to snuff yet. So I'm going to be looking for 14,100. I don't necessarily want to see it go below that level. I have to tell you what I can do. No, I don't want to cancel that. I got to change this. Let me just wait for just a moment. And I'm going to put these up. Come on. I'm going to put this up anyway. I'm going to go from that low. Come on. Up to this high. And so we have 382, which is right here at 43.80. It's already gone below that. We've seen that. So our next, the 50% level is 14,105. So that's what I was talking about. We start getting down towards the 618, and now we're getting in to levels for the downside bigger wave. And I don't want to be mixing those together. So that's why I'm saying we will need to allow for a continued decline to 14,100-ish, around those areas, to finish the B wave. Now, depending on how it gets down there, I mean, if it's going to be a major slide down and through, then we're into that 3 of 3 type of a move. So we're really at that fine line of a point where we have to, where the market needs to tell us, okay, we're going down stronger, or we're holding here and we are going to go up and finish this intermediate wave 2. We're getting very mixed signals right here because it's at that point. One or the other is going to come through. So either we stop rally with intensity to the upside, or we continue to go lower with intensity to the downside. Those are going to be the telling signs of which is going to be enforced. And so we'll be looking to see how things open in the Globex session, which will start in about an hour. So how I need to leave this. A downside move, folks, really brings us, okay, so I'm going to take this away. We have 14,105. So it's not going to let me. I'm going to do it this way. Yeah, that one's gone. Okay, so what we can put together is if it stops and we go up, these are our levels. We have resistance back again at the 50. We've got, look at that 200. You can't get a flatter 200. This is on the daily, very, very flat. In fact, the 20 and the 50 have gone flat. Those are resistance. So the path of least resistance right now is down. And maybe that's what these were showing us. It's just like, well, they're fiddling around here, but it still needs to go down. So first off, and out of the box is that the NASDAQ needs to get up and break 14,536 and get itself above both of those moving averages, 536, 537-ish, and start moving up towards the next level, which is the 8, which is at 14,651. Then we have the 200 at 14,837, 36.37. Those are important. If they stop and they get held up there and they can't push, then the decline is on, not the rally. The rally should not have any problems breaking back above these levels. But as we have said, the reality of the interest rates continuing to go higher really is beginning to take its toll against having to believe that it's already all been baked in to prices. That's not the case. I don't think it is. And I think the market may be telling us that now. Because we continue to see those the sell pressure build when we would be expecting the buying pressure to come in. So either more people are picking up on it, and now we're getting out, and they did a majority of it possibly on Friday's expiration. We do have a fairly large April expiration brewing right now, and I would start to believe that we've got a pretty good chance that this is, I don't need to see what's new in the calendar. This is the 3rd, and it's actually Good Friday. So we have a shortened week. And I don't know if they're going to be doing the expiration on the 14th because Friday, the markets are closed. So being that the case, we can have a shortened week and a kick butt expiration, an April expiration on the Thursday. And again, I'm not sure. I'd have to go look this up to see. But now that I see that Good Friday is coming up on Friday, that's a holiday. It's a market holiday. And so that would push the expiration to the monthly expiration to the 14th. And if that's the case, then indeed we could have a big expiration on that next Thursday, which could set the stage for either direction. Because if we're looking for the market to start to dump out of its next major positions, then that would be, I'd be looking at it to come at us in the in that monthly expiration. Yeah, it's the 14th of April. So it's on Thursday. And so we'd be looking during the week to see how things are building up towards that area. You can see that, even Amazon closed closer to the low than it did even to the midpoint. So these are pretty good. This is pretty good stuff that really took place on Friday, and it's a telling sign. It's going to be very interesting to see how players came out of this expiration and what that's going to be for us for tomorrow. So again, we have an upside scenario, and that pretty much allows for some follow through selling to get us down to that next level, which is 14,105. So right in that area, 14,100 plus or minus 10. So if that holds, then again, the expectation would be that we turn and we start rallying with intensity. We just start going, because that's going to be our signal. And it's going to build in a 5-wave structure. And that's going to signal us that the corrective phase is done and we're into the C wave up. Now, and it shouldn't have a problem breaking back above 4,400, 14,400, 14,500, 14,600. These are low level, and they should just blast through them. You can see this is basically where our 4, our 8, this is on the daily, but even if I break this down and I bring it down to the hourly chart, we're not talking that these things are so far apart. We still need to get above the 4, the 8, the 20, the 50, which is at 536, the 200, which is only at 702. We need to get there, and we need to do it lickety split. Otherwise, I think we're drawing too much attention to the fact of where we want to go, and the sellers just go, the hell with it, and they come in and they start dropping things again. Now, downside would be that it slides precipitously and we break 14,100 and keep on going. Then once that's broken, folks, here we go, back into these black hole areas. If I even take it out on the daily, it's still looking like it's going to be a black hole area. All right, we're going all the way back to mid-March to find support. So we have some 14,000, but then we really are going to be dropping towards 13,800. So I would expect we're going to break below 14,100, break below 14,000, which should provide a pause. And then we're heading to 13,900, 13,800, and on down. Again, if it's inside this third wave, and this is 1 of 3, 2 of 3, 1 of 3 of 3, 2 of 3 of 3, and we're now dropping again. Let me pull it back to that hourly so I can show you what I'm talking about here. If I'm thinking that what we got, 1 of 3, 2 of 3, 1 of 1, 1 of 3 of 3, 2 of 3 of 3, and we're dropping in what could literally, if this thing gaps lower, it's a 3 of 3 of 3. It's going to be nasty. And that's if we gap, because that's the position it's in. After we gap and just keep going, it's going to get ugly. And that would be the position. All right. We have our moving. We have our moving. We have our marching orders. We've got an upside scenario. We have a downside scenario. We have some breakpoints in between. Stay on your toes, follow the moving averages, which, by the way, the hourly is all showing you down. The daily, all marking things lower right now in terms of there. We have the, where is my 50? Right here. So right now we've got the 8 and the 20 to move below the 50, and then everybody's in line. We would have then on the daily, it's going to take some more downside pressure, but once that falls into line, then there's the 200. Here's the 50. We get the 20 below it, and we get the 4 and the 8 below that, and then everything's lined up. The hourly chart is lined up to go lower. If we take a look at that, come on, there you go. 250, 20, 8, 4. So things are lining up pretty cleanly for the downside. So that's why we have given both. I'm going to end it there. Have a great trading day tomorrow, and our next update will be on Monday, April the